TheoTrade. This is Don Kaufman. December 13th, 2022. Just about 20 minutes to go inside of the trading session. S&P's up some 27 handles. However, we had an absolutely spectacular reversal off of the CPI print. Hit 4180. That was it. We're trading 4050, which ironically is precisely where we started just before CPI. Much more importantly, oh yeah, the Fed is tomorrow. Are you afraid of the Fed monster? All right, let's get into this evening's video here with a little bit of the, a look, if you will, at the massive move this morning off the CPI. We actually traded basically 40.50, a straight shot up to 41.80. The day has actually held a monstrous reversal, of which I have to tell you, I didn't trade a huge amount today. I really didn't, but I caught the reversal. I actually sold some premium over in the TheoTheo portfolio, the TheoTheo small portfolio. Caught actually the top of the market here at the cash open, but I also caught, check this out, Captain One Lot rides again. This was a 294 put that I purchased in about the first 30 minutes of trade today. Whacked out of it here just about a half hour ago. It's a home run, about a 500% return on an intraday reversal. Basically what I was doing is looking at this marketplace that opened, started slipping pretty much right after the cash open. Well, we took full advantage of that. Nevertheless, let's get down to business and point out what you need to know going into the Fed announcement. As I said over the weekend update, okay, I updated everybody live in the TheoTrade room on Monday morning. This is a period of time that's all about risk management. You know, when I asked that question, kind of like, are you afraid of the Fed? Listen, you should be. You should be really afraid of the Fed, not because of the Fed or what they're going to say, but because of how the marketplace is pricing the risk. All right, first, let's actually start. Not about the reversal. Forget about where we're trading right now. It does not matter. We're trading at 40.55 in the S&Ps. Great. You know what? So where are we? And I'm really serious about this because everybody gets infatuated with market direction. Where are we right now? Okay, we're right here. When I say right here, where is there? It's absolutely nowhere. Here's where we're presently trading, which from my perspective, it's just the upper edge of where we've been trading over the last 30 days. Here would be the lower edge, which is 39.31. Look at that. We got close to the 42.11, but missed it. And it's all for nothing. Why? Doesn't make a difference. Why? Because we have a big boy expected move once again. If you take a look at the SPX, I'm actually going to take you into the SPX over here. We're going to zoom in, and what you're looking at right now is this week's expected move. It's what the marketplace is anticipating the movement to be. Roughly speaking, this week we're looking for this $120 plus move to the upside, $120 move to the downside. What do we get? Every inch of it. So we tagged the upper edge of the expected move today. Even more entertaining, take a look at some of the trade action. So we actually broke above the upper edge of the expected move, started coming in, hit it, touched it again, and actually broke a little bit lower. Nevertheless, okay, why the cause for concern now, right? So we already hit the upper edge of the expected move. I'm going to tell you exactly why the cause for concern. Let's cruise over to the trade tab here, specifically on thinkorswim, and look, okay, at what we're in store for. So I just froze the screen because one of the most imperative things to understand is right here. What is right here? That, people, that's your expected move for tomorrow. Now I'm going to remind each and every one of you, okay, as I go through the expected move. All of last week, we had a $66 move for the entire week. This week, again, about $127 expected move for the entire week. However, the expected move for tomorrow is sitting just around plus or minus $77. So I think a lot of people were kind of high-fiving one another like, yeah, we got through CPI. Let me tell you, so CPI, it came in a little bit soft. Yada, yada, yada. Nobody cares. It's over and done with. Okay. And the interesting irony, after all of that in CPI, we end up the day like massively unchanged versus where we were. But this $77, okay, anticipation of movement, it's big. And I'm going to tell you exactly why it's big. If you looked over at the analytics of, right, this is yesterday's close, and this gets a little confusing because what I'm doing is looking at backed data. I'm looking, okay, at yesterday's close and looking forward to December 13th. The CPI number, okay, had about almost a $94 expected move, which is huge. And you're like, wow, that is huge. And guess what? We had every ounce of that movement and then some. I mean, for the most part, we closed just shy of what? Well, 4,000. Where do we open? 4,100. Again, we're in SPX terms. So did we do what the marketplace anticipated? Yeah, that and a little bit more. However, now you have to think about, like, listen, CPI is over. It's done with. I don't want to hear any commentary on it. Who cares? Okay. At this point, though, now you're left with the Fed and a $77 move, which is a little less, but ruh-roh, okay? This is a significant move that we're still poised to have. And the Fed, well, the Fed's actually known for that like little hangover because the Fed announcement comes out on Wednesday. You're going to have some big trading days, people, Wednesday, Thursday, and Friday. I mean, Wednesday only like portions of the day. But again, the expected move for just tomorrow is $76. But we all know the Fed announcement, and then, of course, the Jerome Powell press conference happens, okay, in the last 2 hours of the trading session. So much of the energy of that move is going to be felt, all right, for the remainder, again, of the week. That takes me right out here, okay, to what? Yeah, that's Friday. And Friday, oh, you still have $100 expected move. Now, time out, because when I asked the question there, are you afraid of the Fed monster? You should be, because CPI moved huge. And now between now and Friday, we're still projecting $100 move, like higher or lower. And again, it's situations like this that I can't stand when people are trying to handicap. It's the end of the year. We have to go up. It's the end of the year. There's tax selling. We might go down. Okay. How about this? CPI today came in soft. So that'll actually give the Fed, right, more bullets to be able to get more hawkish. Yeah, inflation. Let's just beat it down right now. Listen, you can give yourself 50 different reasons to be bullish or bearish. But I'm telling you right now, this is completely binary. But a $100 move is what you should be concerned with, because we just passed through Monday and now Tuesday. And instead of the volatility coming off, it's not coming off, right? It's just not coming off. Like I can go back to, the weekend, right? Back to the weekend. So I can go back over here to the weekend and you can see, the entire week was holding this $127 expected move. You just passed through 2 days and you still have a $100 expected move. What's going on? Volatility is actually going up. Even though you see VIX, you're like, but the VIX is going down. Yeah, VIX is 30-day vol. That's the thing, is people want to look at like term structure of the volatility. It's worthless now. It's worthless. Why? That's 30 days from now, okay? The market's dead in 30 days. It doesn't make a difference right now. VIX is old school. You got to look at what risk is right here, right now. The other thing that you've got a trouble with right now, and you got big trouble with this, is that we're into a triple witching. So there's so much going on with hedging activity and options expiration and the contract roll. You cannot read through the volume. It's impossible, right? So the volume's all over the place. You know that you have trillions of dollars coming off this Friday in an OpEx, which is options expiration. That's what triple witching's all about. There's a lot of hedging activity, okay? Again, check your bias at the door today, tomorrow, and for Friday. It's critically important. All right. Now, okay, to kind of further that conversation, when the Fed comes out, obviously we're going to have high degrees of volatility, likely going to be a 50 basis point hike, but no one cares about the fact that there's going to be a 50 basis point hike. It's all going to come down to Jerome Powell, okay, the speech, and even more importantly, the Q&A. So again, one of the things that I'll caution you is, yeah, there's going to be a lot of volatility into Wednesday, but hey, mark my words, come Thursday, Friday, we're going to be a rockin'. Okay, we are going to have some big moves. Speaking of big moves, one of the things well worth noting here, all right, in a handful of underlyings, first of all, sector in terms of a sector to watch in the next couple of days, financials. They're very weak right now relative. Look at the reversal here. And actually, when you bring up auto expected moves, they smashed almost 2 times the expected move and pulled back dramatically. The sector is still up, but it is very weak relative to the rest of the marketplace. I think this is of critical importance. It's probably reacting to the fact that the bonds were substantially higher. It takes interest rates a little bit lower. Nevertheless, okay, watch the financials. Also of critical importance, specifically to the Nasdaq and the broader market for that, you have to look at Tesla. Okay, Tesla at this point, it's over. It broke. Okay, I've been talking about, right, this 166 level, and from here, I have to tell you, there's no great feel of where we're headed. 150. Okay, I mean, we're already basically there. Another $10 move down. Nevertheless, Tesla continues to get pummeled, but it's actually putting strain into the Nasdaq. And you would think the Nasdaq here, what kind of strain, man? It's still up 1.4%. Yeah, the Nasdaq right now is being carried, right, by a couple of monsters of tech that are really bid up, including Microsoft, Nvidia, right? There's a big bid. Google's got a big bid. Look at Meta. Meta's flying today, okay? And yet the Nasdaq's up 5%, and yet the Nasdaq, again, a little weak out there overall, predominantly though because of Tesla. I would keep specific eye just in the next couple of days. All right, if financials are slightly weak or Tesla slightly weak, that's one of the reasons for the reversal. If you're kind of curious, okay, what actually generated and why I actually traded in the QQQ today and went for a 500% return, the answer to the QQQ trade lies in the fact that Tesla was getting smoked out of the gate. If Tesla breaks down, it was actually going to break the Nasdaq at some point today. It was actually well worth the shot. Listen, I'm coming and doing this video on a Tuesday. I wanted to reach you guys before the FOMC announcement. Nothing has changed beyond your risk management. Know that the S&Ps are expecting still a $100 move between now and Friday. And 2 times that, which is probability of touching, is roughly a $200 move. From that point forward, let's just keep your hands and feet inside of the vehicle at all times. I mean, when you start looking at major levels, we still have 42.11 up above, which is, within scope. And to the downside, you've got this 39.31. With that, I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.